Hi, I'm Rahul Baijal. I'm a senior fund manager at Sundaram Mutual Fund, focusing on the large cap oriented schemes like Sundaram Select Focus, Equity Hybrid, amongst the other schemes. Uh, Today, I'm going to talk to you about a new good quality product which we are launching in the following days, and it's called Sundaram Bluechip Fund. Uh, this fund is going to be a large cap fund in the SEBI category of large caps, and it's going to have a bedrock of three pillars. It's going to be a diversified fund. It's going to focus on blue chip stocks in the large cap space, and it's going to be a blend of growth and value stocks. We are very excited about this product because we think it's a quality product which can go a long way in helping investors create long-term wealth. Um just to give some more perspective on the fund, like I said, the bedrock of the fund will be around the three pillars. And to elaborate on each of them, firstly, it's going to be a diversified style in terms of number of stocks, which will be around 45 to 15 number, unlike a focus style in which you can have a maximum of 30 stocks. Also, the kind of concentration risk in the fund will be much less. The top 10 stocks will be around 40-45% of the portfolio. And therefore, this will be clearly a diversified style, with the very optimal level of risk taking. Secondly, like I said, you have large cap funds in the mutual funds. Some of them follow a growth style. Some of them have a strong value bias. This will be a combination of both, a blend of growth and value with a bias towards growth. So that's the positioning in terms of growth versus value. And lastly, like the name suggests, it's going to be a fund focusing on picking up the blue chips. Blue chips, as you know, stand for quality, and this fund will use quality as a strong filter when it comes to stock picking and portfolio construction. Quality is going to be mainly around three parameters: quality of management, uh, quality of business model, and quality of the financial ratios. So this essentially captures, the three foundations of the bedrock of the fund. Then coming on to large caps, as you all know, the beauty of large caps is very well understood. Uh, they are very steady business models which have been created from the journey from small caps to mid caps over decades. They come with managements with a strong and deep bandwidth and background. And in terms of balance sheets, they're pretty healthy as compared to the smaller companies. So typically, large caps do well in good times when the economy is doing good, and times like this when there is so much uncertainty and there's a slowdown, they actually tend to keep gaining market share versus smaller companies. Similarly, the large cap funds, the blue chip funds, which invest in these companies, typically are evergreen allocations, and we typically advise that at least 30 to 50% of the allocation, core allocation of any investor interested in long-term wealth creation should be around these blue chip funds. And this is where this fund also fits in terms of allocation. In terms of return potential, if you look at the last 3 years, 5 years, 10 years, you'll find across time horizons, large caps have given very steady returns, and more importantly, with very low volatility, which is not the case with mid and small caps, because they do give higher returns when they are in a bull market, but they also come with higher volatility when times are rough. Unlike that, large caps are more evergreen in their return profile and sober in their volatility, which is why we advise that they should be part of core allocations. Of course, in terms of percentages, you have to take the help of your advisor based on your risk appetite, based on your goals, based on your age profile. and your advisor is someone who can give the best allocation. But clearly, this fund is should be part of a core allocation of any long-term investor, which is looking at large caps as a category. Another question which comes to the mind is the right time to invest in large caps? What about valuations? So my answer to that is that even after the recent rally from March, it's been a sharp rally. But if you look at the valuations and we go a bit deeper into the market, and if you just remove the top 10 stocks, for example, in terms of sizing, you'll find that the valuations are pretty reasonable in the mid-teen Ps. The headline P, because of these top 10 heavy stocks, may look to be in the mid-20s. But if you dissect it the way I did earlier, you'll find that the valuations are pretty reasonable. Therefore, we think it's a good time to invest in the large caps. And in terms of deployment, what we'll do is we'll have a slow and staggered deployment spread over a few months. We'll see how the bottom-up conditions are, how the feedback is coming on the ground in terms of the economic recovery, what the managements are telling us, and how the top-down policy initiatives are taking place. And accordingly, we'll do a slow and steady deployment over a few months. Our view on the market, it's going to be in a consolidation zone. We don't think it's very expensive, or it's definitely not in the cheap zone. So it's likely to be in a consolidation zone, or maybe if there's a healthy correction, we'll use that volatility to our advantage in terms of deployment. Because like I said, we can deploy it over a few months. So that's my take on the valuations and deployment. So net, I would say this is clearly a fund which is a good quality investment product and should be part of core allocation of any investor looking to create a portfolio around wealth creation. And somebody asked me, is it a good time to invest in blue chips? So my answer to that is, it's never a bad time to invest in blue chip. It's always a good time to invest in blue chips, and Sundaram Bluechip Fund fits very well in that category. So thank you very much. Look forward to your support. Goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.